Hey guys, Sunday evening. I want to kind of look at where we closed the week out last week. We finally got some vol. It was nice to see. Looks like stocks broke. Obviously, bonds got crushed, and everything's kind of moving in sync. So I think we're finally going to see some decent moves here. I mean, August is so slow, but it looks like, the way the VIX was up what, 30% just Friday alone. So hopefully this will continue for the rest of the month, and we can have some nice trading here. So let's just start with the VIX. I mean, if we go to the weekly level, I've been trying to teach some of the newer guys on the options team that the way you kind of sit through these lower periods of volatility when the market's just kind of drifting and bouncing along the bottom is, let me go to the 4 hour, is you can go ahead and just play. I mean, the beauty of playing the call ratio back spread is that you're long twice the amount of calls that you are short if you play a 2-to-1 ratio. So your short calls are going to kind of make up for the time decay. All right, and then we always like to trade around our position to help with that also. So you can play a core long. Every time we got low within the cycle down here, I keep telling in the model this is where we're buying, right? I mean, anything below 12 on the VIX is usually going to make money. I mean, if you just buy calls outright here, let's say back in the beginning of August or the end of July, and you're just sitting on these calls and you only go out 2 weeks or a month, even if you go out 60 days, you could lose 50% of whatever you put into the trade just in time decay alone. So that's how you got to play short calls against your long. And the reason I don't like doing a vertical spread, say if you were to buy the 12s, this is the VIX index, so let's just say for instance you buy calls on the VIX, right? Not playing VIX futures or not playing the ETFs on the long side. If you just went long calls and then you said, all right, I'll sell the 14s against it, I mean, you're just limiting your upside so much. But the call ratio back spread, if you're long 12s, you're selling 11s or you're selling 10s that are in the money, and that's what's helping you with your time decay, and then you have all the upside. So just alone on Friday, I mean, we had a huge day in the fund, and the way, you can see how I've been trading this all the last 2 months. I mean, it's time stamped. You see it in the room. You see it on social. I mean, we're just trading around this core, and then we're just waiting for the vol to come back in. So we clearly broke out here. All right. I mean, the VIX could easily go back here the 20s, mid 20s. All right. And it wouldn't take much either for us to have a type of December, January type of move and be back up here in the high 20s or even into the 30 area. So we booked a lot of gains here on the VIX. You can see, I mean, I punched out 3 times on Friday into this spike. And that's the right thing to do. If you look at the hourly, I mean, you got to book these gains on the VIX when you have it. I mean, tomorrow we could come in and this thing could be back down at 15, 14. Just on, if the market opens up fine, it's calm, there's some sense of, relief come tomorrow, the VIX could easily open back down at 14, 13. And then everything that I sold up here in the 17 and the 16 range, I probably put a little bit back on. All right? So we want to buy this next dip on the VIX for sure. We want to be looking for a higher low anywhere in here. 14 or below, you just get more aggressive. All right? So, I mean, I have calls from here. I mean, 13, 15 strike. I was long some 11s from here. All right. So it's the same thing. I mean, we've been doing the same thing last year. All right. So I mean, these are the type of gains we booked here. I was long 13 October calls. I mean, it just speaks for itself, right? Now here's the 10s that I'm short. All right. So when I originally put this on, I might have been short 300 versus long 400. And then when the market sells off, I'll take some profit on the short end of these calls, keep some to help me with the time decay, and then when we get the next ebb and flow rally higher, I don't have these short calls going against me. So I increase my delta as the market sells off. But I mean, huge day on Friday. Right? So this is one of my favorite strategies, and the fact that the VIX is doing what it is, along with what, I mean, this was obviously just nasty. So I mean, it's just a freaking bloodbath. So we're trading in this tight range. You knew what we were going to do for a move outside of the bands and greater than 1%. So it didn't take much for us to drop 40 handles. So from here, this is the weekly. Now this cycle is coming down, but if you track the percent D, it's only in the middle of the range. So we can expect another 2, 3, 4 weeks lower, right? We might even achieve this low here down around 2,000. We could do that in a day. All right, so this is bearish. I mean, we broke all these lows. We broke the 8 on the weekly, so that shows you the intermediate term trend is clearly down. If we look at the daily, same thing. This was the higher low at or near the 30. These were the higher lows. We broke that. This is more than likely the start. This bearish real money candle, as they call it, is more than likely the start of a move lower. All right, this is the most bearish candle on the chart going back to Brexit. So you have to respect it, and you want to play that as such, meaning you want to be on the bearish side. All right, and the only way you're going to get me to think bullish is you got to take out this candle, and then you still have the all-time high sitting here at 2191. So you're not going to get me bullish until we get back above these highs. But I'm going to use this as a wall now. Okay. Any bounce back up into this candle is a gift on the short side, so we want to be a better seller, right? And then we can go down to the hourly and 4-hour charts to kind of time it a little bit better. But we're clearly prices in the southern hemisphere. It's below pi. It's below the 30. Okay. All these previous lows were taken out. And this is just nasty. So we're obviously very oversold. The cycle's low. The next top of this cycle, though, we're going to be a seller. Be all over that. 4-hour cycle, very low. Right? So you don't want to be hitting them down here getting short. We need to bounce first. It's going to be the same thing in the Dow, same thing in the NASDAQ. I'm short the Russell longer term. I'm playing the weekly and monthly. You can see here I sold in August, and I was planning on selling all the way into these highs back here, 1292. Looks like we're not going to get it. My call was that we get a lower high relative to this high, and I think we probably just got it. So you can see this is where we were short the week of the 15th. It also happened to be the high on some longer term cyclical stuff. I don't have that chart up. I'll put it in the room and I'll put it on the socials. But there's a longer term cycle that comes in here, and it happened to be run right into these highs also. So that's it. I mean, we want to play this from the short side. The weekly has some more room to come down. Percent D is still up at 60. Lots of room there. So I want to see the market test these areas here, and then I would definitely probably be getting flat. I mean, this is a long-term trade for me. I'll maybe try to keep a piece for these lows here at the beginning of the year if we see that. But we'll just trade that as we go. All right. Now, long bonds. Long bonds gave back some money Friday and Thursday, and that happens. There was a conflux of trends. So the intermediate trend, this is the 4-hour, you can see that we moved into a range trade, and then this started to roll over. And when the long bond couldn't get above this area here, you couldn't get back above pi, the 200, that was the right place that you could even play from the short side of the intermediate term, and then you would have gotten rewarded, obviously, Friday, big time. All right, now I was playing a little bit longer term core position, so I was actually buying on these lows, and then when we broke, I stopped in here. You can see it. All right, so I sold into that rally because of what I just said. And then I was just playing it small, just seeing if we were going to turn the corner. And then when we broke here, I just got out right down here. So I dropped 10 there on long bonds. Now I'm actually short a piece because I want this to rally. I'll explain that in a second. But I dropped 10, but I'm playing a long short portfolio, so I'm actually short high yield that did much better on Friday and more than made up for what I lost. And that's the nice part about when you learn to play global macro. You can be long treasuries or the long end of the treasury curve, more flight to quality type of play, and then short the riskier bonds like high yield or the high yield market. And I played that one through the ETF HYG. But from here, guys, the weekly, the market needs to hold here. There's still potential you could make a higher low, and if stocks, if stocks continue to crater, bonds are probably going to go bid again. That's definitely possible. So we could still get a higher low here, but I want to just be on the sidelines for now, longer term. I mean, the cycle's very low. It's almost about to turn up. So if that does materialize on a weekly level, then I'll get right back in long. But I need this to kind of turn the corner first. So here on the daily, it was the same thing. The market broke the bands, but closed back up above it. So then these higher lows, that was the clear pivot, and we broke that. So when you break TMS, I call it, they used to call it the Jenkins rule. We go back to the 200 pi when you break the TMS like that. So I expect we can probably fall to here. These lows is 165.25 from June. Again, the 200 and pi. So the bond market can definitely correct into this area, and then that's where I'd like to be a buyer. So I've been playing a core long all year, trading around your position. Put some back on. That broke. Just cut your risk, and then I'm fine with cutting my risk here and getting back in here. I mean, that's the smart way to play it. I don't want to sit around for a 7-point drawdown. All right, and then if this were to take out the highs from this move, then maybe I'll put a piece back on. Longer term, all right. So right now I'm short, and I'm just the way I'm going to play it because I did buy some fives, so I'm playing the steepener. But if we get a rally back up into this area, we want to be a seller near term, intermediate term. You can play that. It's going to be tough for the market to get back above these highs. So if you want to play the intermediate term, swing term, you can be a seller of 30s anywhere and back into this area. All right, and then just to cover fives real quick. So I was playing this from the short side for the last few weeks because it was in a downtrend. So I was long 30s, and then when you get these pops to the top end of the range, I would sell fives against it, cover my fives. Then I actually flipped and got long because fives haven't broken the lows from August yet. It's the long end that has, right? If you want to look at the ultra bond, which is out even further duration than 30s, these were the higher lows from August that broke. Lower lows. Okay, this shows you how bearish this is, right? So you can be a seller here also. So that's why I went home a little bit short 30s, because if we do rally back, I'm gonna sell more 30s, or I'll maybe even sell some ultras. All right, and then conversely, if you look at the belly, fives didn't make lower lows. See, fives are acting much stronger. They didn't make new lower lows yet, so I'd rather be long them. And then the same thing with twos. Even with everybody chasing the Fed's tail again, the Fed, I mean, this wasn't a sell-off in bonds necessarily about the Fed. I mean, twos should be a lot lower if that's the case. You can see that twos are still holding their lows. Right, so that's part of what's been going on with the curve steepening. There's a lot of curve trades probably being unwound also. All right, so along with that, against my long 30-year position, we've been playing this from the short side in high yield, just trading it around. I mean, here you can see I was selling puts against my long core puts, putting them back out, selling more at the money's, covering them. All right, and here I doubled my position. That was pretty much the highs. and I got rewarded for it Friday, and I expect more of the same. I mean, high yield is really vulnerable up here. All right, this market, you do not want to be buyer of the junk bonds or high yield up here. This is just asking to roll over. It's really high within the monthly cycle. It's been a nasty downtrend really since the middle of last year when the overall economy peaked, and you've been making lower highs. So it looks like we just put in a lower high. So I'm very bearish high yield market. You want to be a seller. Here's the daily, same thing. We can be aggressive now as long as we're below these highs. And I think you could easily, if you look at the lows, if you look at this as one move about halfway, the market should test at least halfway in here. So I'll book some more gains here on the short side. And that was oil. That was the VIX. So here's what we're doing on high. Oh, this is FAS. Sorry, that's financials. I had a good day there too. Anyways, high yield, I think I dropped 10 on long bonds and I made 32 or something on Friday. So I'm long. This is one of my biggest short positions. Oh, this is FAS. Sorry, guys. This is the financials. What I meant to type in was high yield. Same trade to me. So we were just looking at financials. So everything there is true. But here's the same thing. High within the monthly cycle. These bands are rolling over. So between financials and high yield are my two biggest short positions. And this is just beautiful. These bands are negative. This is bearish. Even though we've had a strong rally, 1, 2, 3, 4, 5, 6, 7, 8 weeks, basically a nice 8 count. And now we're making lower highs on the monthly level, in line with the cycle, at or near the 30. So I expect this market could really get rocked. I mean, there's a lot of room here for this to just collapse. So I'm going to take some more gains into here. If it doesn't make a higher low here, then you could be back at the lows from June. And 50% of this move is about that 82 level also. Alright, so this is where I was adding more. Just getting short here quite a bit. And then booked some gains here Friday. It was a nice move lower. Alright. Same thing, any bounce here in high yield, we can be shorting HYG. And then lastly, we just look at oil. There's not very many days left in the October contract, so I was basing a lot of my puts. I mean, I was selling November back here, pretty much at the highs. Sold some more on this pop, sold more on this pop, which was the high. Right, now my average was pretty nice, it was right around 47, so I mean, that was the type of day I had there. Friday. Still short a couple. I have 45 puts, 48 puts. I booked some of those. And then these are parts of my ratio put spread that I had on. Alright? So obviously those are going against me. But I'm definitely core short. So from here, same thing. Any rally back now here to around 47 is a gift. Right into this 30 that's rolling over. Bounce back into here, we're going to be a seller this week. We might be in a 48 to 44 range. We could test these lows 44 easily. So I want to keep playing this from the short side. I've been a seller there all year. Part of that is just, you know, we're bearish the global economy, growth slowing, very bullish the dollar, which is just not good for. This has been quite a reflationary bounce all year, but it's in the context of a bigger picture downtrend. You can just look at the bands here. So we're just making lower highs in the context of this bear market. Alright guys, so I'll be up early in the morning. I'll see you in the room. And if anybody's new, you know, please join us. We're building quite a network of independent professional traders. It doesn't really matter if you're trading Forex, commodities. We got some commodity hedge funds that are working with us. Individual traders, day trading, a lot of FX markets. So you can join the room, join the team. It's free. Just visit jenkinsrm.com. RM stands for risk management. jenkinsrm.com. And kind of looking forward to this week, guys. Hopefully we'll have some more of the same big moves like we had Friday, a return to some of this volatility. And I think we want to continue to think risk off. There's going to be no reason to step in and really buy the market directionally as far as stocks go. I don't think that's going to be the case unless we get back above 21.91. All right, so longer term, if we get knocked down hard, I'll go back to some of the names like Facebook and Google, and you can follow along there. There'll be some times to get back into those for swing trade or even put some away on the longer term core positions. But anyway, I'm a better seller, and I'm bearish overall, so we'll see if we can get some more of this risk off move like we had Friday. Talk to you guys in the morning.